Hi, good morning. Today is Friday, the last trading day of 2022, and we are into the last stretch of the trading day. And overnight, we have seen somewhat of a rebound on Wall Street. You can see that the market actually rebounded. Maybe Santa Claus is late, and hopefully that he can catch up a little bit. But we only have 24 hours left, and not much you can do unless there's a massive rally, which is going to be a little bit not practical. Okay, so I think it's basically some kind of short covering, and we can see overnight Wall Street is now trading in a decisively tighter and tighter range. The market is definitely in a consolidation mode. At most, I think if the market continue to extend based on yesterday's rebound, there's a possibility the market may go into the 33,400 to 33,650 point levels. And if this is the case, then maybe this is an area of opportunity. But then again, this market can extend its rally all the way to the mid-week of mid-month of January. So again, the risk is to the downside. I do not want to chase this market on the way up. Maybe I want to wait for the market to lose its momentum, and then somewhere in the middle of June, okay, I'm sorry, middle of July, then maybe we could see a possibility the market may lose momentum and maybe getting ready to slam down. Okay, I do expect a spike in volatility come in the middle of January. Then of course in the S&P 500, we can see the market also rebound. Based on this rebound, it looks like a three wave. So three wave has always been classical corrective in nature. And if this is the case, market may go up to 3,900 to 3,935 levels, and this could be another area of opportunity. But the market is definitely looking to rebound. Let's see how much it can rebound tonight. Okay. Over the last few trading weeks, we can see that the pullback from the Nasdaq high in December of 12,166 is the most severe in the Nasdaq 100. And last night, the rebound is more pronounced in the Nasdaq 100 relative to the Dow Jones or even the S&P 500. So we can see market is coming off from a very low base. I was into yesterday's update. I was thinking that the market may actually attempt to take out the year low at 10,440, and this is still a possibility going into the early part of 2023. Okay, so do keep in mind that this is by far the weakest link among US equity index. The downside is definitely more pronounced compared to the Dow Jones, okay, where most of the smart money has been parked. Okay, so going forward, we look at Asia. Asia have a positive reaction to last night's rebound on Wall Street. You can see that the Hang Seng now is just touching the 19,900 level. There's a possibility it may take out the 20,099, which is the high this week itself. So we will have to see how far it can go. But there is another high here, which is the August high at 20,283. So there is another barrier in which it has to cross over to be able to be decisively positive. Okay. Over in the Shanghai Composite, we see also a rebound, and this rebound looks like it has legged and maybe even going up to 3,135 levels. So there is the possibility if it's an equality move, I think it will be at the upper end of this range. Okay, so 3,132 to 3,135 seems like a possibility here. Okay. The Nikkei 225 actually also reacted to the upside. You can see that the structure in the pullback from the November high of 28,500 is very severe, and it looks like this is going to be likely to be a five wave. And if the market has a rebound, the area of vulnerability will be 26,555 to 26,950. So this is the area I think the market will actually go into, but whether it can go beyond this level, it remains to be seen. I doubt it can. Okay, but again, a lot depends on Dow Jones, how it perform in the coming few weeks of January 2023. Over in the currency market, we can see that the dollar yen continue to slide. Since the market hit a high of 134.50, which is on Thursday, the market has been coming off, and looks like the market may actually continue to slide lower. Of course, the immediate target will be 130.57, but I think the more important low is this low. This low is 130.39, okay? Because based on my daily time frame, this level cannot be taken out. If it does, then the entire structure of this, maybe I'll refer you to the daily time frame. The entire structure will change, okay? Because this bull market started all the way back here, okay? Back here. let me see, is any back here, sorry, at the low of the pandemic low, which is the March 2020, okay? So it started that far back, okay? And if the market take out 130.39, that means this entire bull market in dollar yen would have been invalidated, okay? Then I will have to keep to my bearish view at least in the daily time frame. So that means the market may actually come off if the market take out 130.39. So this is a crucial level to watch and not so much on the 130.57. Okay, do keep an eye out for this level, 130.39 in my chart here. Okay, then of course in the sterling continue to drift without any sense of direction. The market is basically doing sideways, but I think the bias is to the downside. My immediate target is 119 or maybe to 118. I think 118 is a possibility, but if you want to take short-term profit, 119 is a very high possibility here. Okay, so market may actually drift all the way and then come back down to 119 at least, very minimum. Okay, so whereas the euro versus the dollar has another rebound last night to just under 107, and this is an area of opportunity here. Anything below 107 seems to be attracting a lot of sell interest. And if this market, let's say we draw a very simple support line here, okay? And if this line here is taken out anytime soon, then of course it will signal that the upside momentum is lost and the market is looking to the downside. And obviously I'm looking at 102, okay? 102 has always been my my target range. And if this is actually setting up to be a very nice low risk, high reward kind of short position, I currently have no position, but the reason why I'm not getting in now because of the time constraint. We are left to maybe to midnight, okay, to have some good trading opportunity. Beyond midnight tonight, I think the liquidity is going to shrink so badly. But again, I'm not prepared to take up a position going into the new year. Maybe I will wait for the early part of next week to see if the market is still around this price. And then if it does, then I want to take a short position, put my stop just above this level, not this higher, 107.36. This is not the ultimate high that I want. Maybe I can refer you to the daily time frame. Again, I think my target here, this is the point of invalidation. 107, maybe you put at 108. Okay, anything above 108 should be quite safe. Okay, don't put a round number because 108 is a very, very nice round number. Market may be tempted to actually trigger those stops. So put a stop just above 108 because this market, very much like the dollar yen, has its early move here in March of 2020. Okay, 122.66 was the high. So you can see that if the market take out this high here, 107.87, then the entire bear market in euro dollar may be temporarily over. But based on risk reward ratio, I think it does warrant a trade here, because if I sell somewhere around current level, okay, put a stop above 108, I am exchanging the possibility the market will come down to 102, okay, maybe at least 103. So there is quite a bit of incentive to do short right now based on my daily time frame posture. Okay, over in the Aussie, let's go back to the 4 hours. Over the Aussie, we can see a bit of a rebound, similar to what we have done for, let's say, the sterling. Maybe what you can do is do a simple support line here and see whether the market do take out this line. If market do take out this line, obviously the momentum is to the downside, and we can do a 3-way pullback. Maybe the market will go up to 0.66. So this will be the current target here. Okay. Euro dollar versus the Canadian looks like a better bet, because the market have a very, very distinct rally, and it has not lost very much. Okay, from where the low was, I think the market has pulled back 50%. So that is actually 50%. So it's actually technically a good level to take up a long position, put a stop below 134, let's say 75, and exchange for the possibility the market will retest the 138. So if we are buying somewhere around current level of 135.50, there is a good 250 pips here in exchange for what, 70 pips a potential loss. So I think the risk reward does make sense even for dollar versus Canadian. Okay. So if you have no appetite to hold position beyond over the holidays, over the weekend, then maybe you should want to take a look in the early part of next week. Okay, crude oil actually pulled back below $77 per barrel. My original stop was just below this level, but I decided that I want to remove it and watch for a while. Good thing that I did. If not, then I would be stopped out and the market rally back. Okay, the low traded last time was $76.79 per barrel. I think the market has a possibility of retest the $81, maybe even higher, to touch the $83. So I have two long position, hoping that market can actually rally into this bracket of prices. And then I think the market already have a simple three-way with the zigzag. I think it will end up to be very complicated. And if this is the case, there's a possibility we can see such a move developing. Let's say we do this, okay? It could be something like this, okay? So we are now at a point whereby I think the market can actually be supported. So if this is the case, I think the market may have found a bottom last night at $76.79, and it may go up to the upper end of this channel here, getting very, very close to $83. Hopefully, in terms of time, I think $83 is quite possible. But if you don't want to stretch it, maybe I will have to revise my target lower to $82, maybe at 70 cents or 80 cents, and then call it a day, and then wait for another possible set of three wave, making it a double zigzag. Okay, so this is a possibility here. Over in gold market, we can see that spot gold remains very, very well bid. We can see the market has been respecting this technical support line here, and until the market takes out $1,834, I think the market may actually be continue to consolidate. And if there's any one time the market take out this support line, then the market is signaling the loss of momentum. Then the possibility of an extended fall back to the December low at 1,743.70 cents, or even to as low as 1,725 is a possibility here. So there is that potential here. We will see how much the market can actually go higher. Based on what we are saying so far, the market has already have a 61.8 retracement. This does look like a great position for those who want to do counter trend. Okay, so if you do a short somewhere here, put your stop above 1,835, for example, in exchange for a possibility the market will take out this support line and then extend all the way to test the December low at 1,743.70 cents, and maybe leave some for the possibility to test the 1,725. Okay, so this is possibly a setup. But I will not recommend this trade to short in the silver market, because silver market have a different structure. If this price channel is going to be durable, definitely you don't want to sell near the bottom of this channel here. What you want to do is to sell at the break of this channel. Okay, so if there's going to be a break, I hope that I can see this develop, because I have always wanted to buy silver. And let's see how far it can drift basis the gold market. So I will take my cue as to the bottom in the silver market from the gold market. If the gold market actually can go down to 1,725, that is where I am going to go in to buy silver, whatever the price is. Okay, because I think the silver market has a lot of upside potential. Okay. Now, as far as crypto is concerned, there's hardly any momentum here. Bitcoin remains very flat. There was a bit of a rebound from the overnight low of let's say, what's the price here? This is 16,443. Okay, so there is nothing much we can see here, less than $200 range from last night's low. So we can see that the market is basically just hanging on for dear life. Whereas Ethereum is the same thing. We have hit a low of $1,182.90 thereabout. Market has a bit of a rebound, but basically has been doing nothing very, very much. Okay, Ripple is a different story. Ripple actually tested or about to test the December low at 0.3324. The low so far is 0.3338 as of now. Okay, Binance Coin is not doing anything. The market is basically quite flat, nothing to add here. But Dogecoin has been falling, and we can see Dogecoin has gone down to 0.692, and which is the same price as what we saw earlier on Wednesday, same level, 0.0692, which is the same level, making it a double bottom for now, but it is very, very low time frame, so maybe it's not going to be representative enough. So you want to watch for this move here, but I think the bias is to the downside. Okay, Cardano, needless to say, Cardano has gone down to the year's low at 0.24. So this is the lowest it has been so far this year, and it does looks like it is remaining very vulnerable. Okay, the other one that you want to watch will be Solana, which actually have a bit of a violent reaction. market went down to $7.96 before it rallied, okay, to $10.86. So this is a big jump. This could signaling the market may have already hit the bottom, and the market earlier on pulled back 50%. And this is an area of opportunity here. If the market can actually bounce back to, let's say, $9.07 to $9.40, I think this is the area of opportunity to buy, put a stop below $7.96 in exchange for the possibility that the market may have already bottomed and getting ready to rebound. Okay. So this is all I have for you, and I wish all of you a happy new year, and hopefully you have a great time over the holidays, and I shall see you again this weekend, which is New Year's, 1st of January on Sunday, and let's go over all the markets. It's going to be a extended a webinar because I'm going to cover all the yearly time frame, okay, which is going to be, I'm going to cover the monthly time frame to give you a wider perspective of where the various markets are all moving. I'm just updating my charts, getting ready for Sunday. So if you are free and if you are still sober, come and join me on New Year's Day on January the 1st, which is this Sunday at 8 p.m. Singapore time. Do remember to register, look out for the registration link. And if you are previously registered, it's the same link, same login, and I shall see you this Sunday. Bye-bye.